Hello, Matthew Bell here. Today I wanted to talk about taking your required minimum distribution, and what I thought I would do. In a previous video I gave an overview of what the required minimum distribution, or RMD. I gave an overview of what that actually is, and so if you're joining this video, if you're tuning in here just straight from a search, I recommend that you watch the overview video first, unless of course you feel really comfortable with the concept of what the required minimum distribution is and what it involved. But what I thought I would do in this video is attempt to actually show you the procedure for taking a required minimum distribution. Now, there's actually three different steps, is what I'm going to kind of refer to it as, or three different pieces at least. The first one, and I'll just sketch them here, the first one is going to be in January. You typically receive a Form 5498 from whoever it is that is the trustee or the custodian of your IRA account. Okay, and this form is informational. It's going to include the fair market value of your IRA as of December 31st of the tax year that's relevant, and it's going to include a line that basically states what your required minimum distribution is. Now, you should bear in mind that these 5498 informational forms are going to be sent to you from each custodial or trustee account holder. So if you have an IRA through one company, they're going to send you a 5498, and if you have a separate IRA through a different company, they're going to send you a 5498. But these forms, you don't really have to do anything with them. They're just for your information. Now, you are able to withdraw the required minimum distribution from each IRA separately. You can also total them all up and take them from one or more accounts. So in other words, you don't have to take the RMDs from each account when it's an IRA. And a 403B is a similar thing. 401k RMDs, now that's something different, and really is going to have to be handled in a different way. You're going to have to take them from each 401k when it comes time to do it. But the 5498, this video is just going to kind of be a sketch of the overall procedure. So the first step is the 5498. Now the second step is going to be at some time in the year, you are going to have to actually take the required minimum distribution. That is to say, you're going to have to request that withdrawal or that distribution. And this is going to be step 2, actually requesting that. Now the deadline is going to be December the 31st of whatever tax year it is, unless it's the very first required minimum distribution that you are ever going to take at age 70 and a half. Then the IRS pushes back, or at least gives you the option to push back the required beginning date, or RBD, until April the 1st of the year following the year you turn 70 and a half. Now, if you are still employed, RMDs through a 401k can also be postponed into your actual retirement date, but an RMD on a traditional IRA is going to have to be taken according to the schedule that I just briefly outlined. For more information, again, I invite you to look at the dedicated video on required minimum distributions. So step 1, again, the 5498 informational form. Step 2 is actually requesting the distribution. Now, this is going to be handled through whatever company it is that holds your IRA. So if you've got an account with Fidelity, you're going to ask Fidelity for the RMD. If you've got an account with Vanguard, you're going to ask Vanguard. Prudential, whatever the company is, you are going to request of that company that they distribute your required minimum distribution to you. Now, you're going to have various options. You're going to have the option to elect to have the custodial company withhold taxes. You can just receive the entire distribution and worry about taxes down the road. Because of these kinds of differences in selection options, I'm actually going to have a separate video just on how to fill out a distribution form. So again, if that's where you're at, if you're on step 2, you might just check out this second video in this brief sort of series as to how to take a distribution. Now, I did a separate video on that for a couple of reasons. Reason number 1 was just because a person might take a distribution for any number of reasons. A required minimum distribution is only one reason. But number 2, there are a couple of options, and because each form is going to be different depending on, be a little different depending on the company, there's going to be some variation there. Right now, step 3 is going to be you will receive a 1099-R again from the institution that you are withdrawing this or just getting this distribution from. So now the first step again, the 5498 informational form will tell you what your RMD is for each institution that has an IRA with you. Number two, you're going to actually request one or more of those distributions, and at least the amount of the distributions that you receive has to total the amount on each of those 5498s. In other words, if you've got 4 IRAs and each one of them has exactly $100, unlikely, but if each one has exactly $100 that you have to take out for required minimum distribution, then you can either take 100 out from each of them, or you can take out 400 from one. Now, the math probably doesn't check out at all. If you only had, a $100 distribution, I'm not checking the math here. I'm just giving you the concept. The concept is that the total amount that you receive in distributions has to be the sum of all the required minimum distributions. You can take each RMD from each individual IRA, or you can take them all from one, or you could take a portion from one and a portion from another. You have a number of options there, right? So the third step, again, is the 1099-R. And this is going to be the form you're actually going to bring to your tax preparer, or if you do it yourself, you're going to include in your calculation of your gross income. And this form is going to basically represent, the 1099-R is the form that discloses the amount of retirement income from retirement account that you have. And so again, this is going to be included in your tax preparation. Now, I'm going to attempt something here, which is to share my computer screen, and I hope that this works. But I hope that you're able to follow along with the various forms. Again, I'm going to show you a 5498. I'm going to talk about briefly the distribution, and then I'm going to show you a 1099-R in this video. I have a separate video where I'm also going to show you a couple of different examples of distribution request forms from a couple of different companies, just to give you a flavor for how you would actually fill those out. So without further ado, I'll segue into my screen. Thanks a lot.
All right, so here now you can see this is form 5498 as it's displayed on the IRS's website. So you can actually you can see the URL here, irs.gov. And then it's form 5498, the PDF file that they have. Now there are several different actual shots of this. You can scroll up and there's a red page, and then the black page down here, copy A is what this one says, and then copy B, and so on, and then there's instructions. But what I thought I would do is just kind of run through, so you can see in this first square, it says trustees or issuer's name, street address, city, town, etc. So trustee, again, that would be whoever is acting as the custodian, essentially, for your IRA account. Vanguard, Fidelity, it could be a bank, whatever institution is acting as the trustee or custodian. And then you can see that custodian's identification is going to be plugged in here, their tax identification number, and so on. And then participants' tax identification number. So generally that would be your social security number, your name, your address, and so on, your account number, if applicable. In box 1, you can see that it says IRA contributions. So this is going to be the total amount of contributions that you made in that tax year. So this form is dated 2019, and you can see further down, box 11 says if check, required minimum distribution for 2020. So of course this form 2019 would be given to you in January of 2020, and this is an informational form. You don't actually need to do anything with this form in the sense that you don't have to fill it out. This is for your information. And there's going to be some information on here. If you did any rollovers, it's going to appear in box number 2. Now, direct transfers are something different. That's not going to appear on here. If you did a direct trustee to trustee transfer, that won't be on here, but a rollover would. Any kind of Roth conversions, recharacterization. I mean, some of this is going to be beyond what I'll get into right now. Recharacterization is basically taking back contributions, that are classified one way. So if you decide you want to put money into, your your Roth and then you change your mind, you want to put it into the IRA, there are certain rules regarding that, and it's beyond what we'll talk about here. Now, FMV amount is in box number 5, so it says FMV of account. FMV stands for fair market value, and this is going to be the value of your account as of December the 31st of, again, the tax year that's displayed on here, so 2019. December 31st, 2019, the account value is going to be listed as the fair market value, and then using your life expectancy factor or your RMD divisor, you're going to get the answer to how much you're going to owe in terms of your required minimum distribution. Now you can see that this form has a number of different possibilities. You might have an IRA, traditional IRA, you might have a SEP IRA, a Roth IRA, and then you can see the breakout boxes 8, 9, 10 for SEP, simple, and Roth contributions. There are restrictions on how much you can place. So for example, the amount that you can put into a traditional IRA and a Roth IRA is capped at $6,000. If you are younger than 50, if you're over than 50, then you can put in an additional $1,000 to get up to $7,000 in a year. And that's a cumulative amount. So cumulative, depending, if you have 3 IRAs, you can only contribute $6,000 or $7,000 depending on your age to all of them. If you have a Roth and an IRA, a traditional IRA, again, you can only contribute up to $6,000 or $7,000 together. Now I get more in depth in this in another video, and this does not include Roth. That would be part of your 401k. So if you have a 401k Roth, that's something different. Down here, again, you can see the box that says if checked, required minimum distribution for 2020. You can also see the RMD date, which would be provided. That's the date that your RMD would be due. And then finally, probably, for our purposes in this video, the most important box is going to be 12B, the RMD amount. So that's going to appear here, how much money you're going to owe for your required minimum distribution on your IRA. Now that's this particular form. Now once you have identified, and by the way, this form will be sent to you usually in January. I think that trustee and custodial institutions are required by the IRS to send it by January the 31st or February the 1st, depending on how the date falls on the week. If it's a weekend day, I think it's February 1st or January the 31st. So in January, you will expect to receive one of these, either if you've contributed to your IRA that year, or if you have a required minimum distribution that is going to be due. Now, Vanguard is a very popular company for investing in, and they hold IRAs for many people. So you can see in this particular case, they have a sort of gateway, Vanguard's required minimum distribution service. They talk about how they will calculate the RMD. They can even distribute it. And here you can say once you have requested a distribution, it says we can automatically transfer your money to a Vanguard non-retirement account or deposit it at your bank, and so on. And then they give additional information, which is just sort of standard, and then they direct you to sign up through this link. Similarly, if you look at Fidelity, this is Fidelity's page and their article, How to Take a Required Minimum Distribution. And then if you scroll down, you will see that there are links for making a one-time withdrawal to satisfy the RMD this year, and then another link down here for satisfying the RMD every year automatically by setting up an automatic withdrawal, and that's from Fidelity. So every institution, the point is, that is going to be a trustee or custodial institution for your IRA is going to be required, number one, to send out that informational form 5498, and then secondarily, they're going to be required to facilitate the distribution, and that's going to be either some written request for the distribution, some kind of automatic thing that you can subscribe to. It'll either be electronic or in paper form or whatever, but it should be fairly straightforward. And if you have a contact person, somebody that you discuss the particulars with your account, the particulars of your account with, rather, then that person should be knowledgeable in how to request a distribution from whatever company it is. And now, of course, I mean, Vanguard and Fidelity aren't the only ones. You got Charles Schwab, you got many, many others, banks, savings and loans. You know, there are many companies that might that you might have an IRA through. Once you have received your 5498, and once you have requested the correct amount of the distribution, and remember that if you have multiple IRAs, you will calculate the amount of the IRAs. You will calculate the amount of the distribution for each IRA. However, there is some flexibility in withdrawing that money, so you can actually withdraw all of it from one IRA and satisfy the required distributions for all of them. So the IRS does not, with IRAs, the IRS does not require that you take each required distribution from each account individually. You can, but you don't have to. So one reason why you might not want to would be if you have one account that's doing exceptionally well and another account that's doing exceptionally poorly. You know, you might decide that you're going to withdraw all of it from one account and leave the other account alone. Now, whether that's a good idea or not is going to depend on how you have your money invested and allocated, and certainly advising you on that is going to be well beyond the scope of this video. But once you have requested the distribution, then as it said in the Vanguard link, you know, they can either deposit it into another account for you. I mean, I'm sure they're happy to keep your money under their management, so they will be happy to open or to deposit that money into a non-retirement account. But then once you have that, what you will find is that you will have a Form 1099-R from the IRS. And that form will include the information as to how much of a distribution you received. Now, it's actually this form, the 1099-R, which you can see here, that's going to include the amount of the distribution, the taxable amount of that distribution, and so on. And this is the form that you actually have to do something with. So this form you would then take to your tax preparer, and your tax preparer would include the information on this form as part of your tax return. So a distribution from a retirement account and a 1099, that R stands for basically retirement. The distribution from a retirement account is going to be reported on a Form 1099-R, and since you are drawing on money that is in an account that has never been taxed, of course, when you take this to your tax preparer, this distribution will be added into your gross income total, and you will be taxed at your normal income rates. So those are sort of the three forms. The 5498 is the informational form. You'll receive it in January. The distribution, you can actually take it at any time during the year, but you have to have taken it by December the 31st. Usually, your very first RMD is required to be due April the 1st, the year following the year you turn 70 and a half, and then that year you'll have two. If you postpone it, you may take it December the 31st, but then every subsequent year it's due December the 31st. And then the 1099 would be sent out to you, of course, before tax season. So before you had to take this information to your tax preparer, the 1099 would be sent to you, and you would then have that information for your tax preparer.
We've been through a lot of information, so let me just sum up one more time the what I'm calling the three steps of your required minimum distribution. Okay, so step number one is just receiving the informational 5498 that tells you what the RMD is. Step number two, actually requesting that distribution. And once again, I have a separate video on distribution request forms. And step number three is receiving a 1099-R that you will then take to your tax preparer, and that 1099-R will disclose what amount you've received, whether there's been any taxes withheld, and then that distribution is going to be added on to your earned income in a given year, and it's going to go in towards the calculation of your adjusted gross income, and then you're going to pay tax on that money. So those are the three steps. If something I've said today has been of use to you, please like the video, subscribe to the channel. I have other videos, as I've kind of mentioned throughout, but I have other videos off of the topic of RMDs entirely. I've got videos just describing traditional IRAs, describing Roth IRAs, describing retirement accounts like 401k, 403b, the 457b, I have videos on term and whole life, so just a lot of informational videos, and I have additional ones planned. So subscribe to the channel and hit the notification icon, the little bell, and you will be updated when new video content becomes available. I thank you so much for joining me today, and I wish you well on your RMDs.